Jillian Sidoti from crowdfundinglawyers.net, and this is our segment, People You Should Know. Thank you so much for joining us today, and today's special guest is Joan Dromey from Computershare. Hi, Joan. Thanks for joining us today.
Hi, Jillian. How are you?
I'm doing great. So I wanted to tell all of you that Joan is the Senior Product Manager and Business Analyst at Computershare. And if you haven't heard of Computershare, it's because it's the biggest company you've never actually heard of. And I'm going to let Joan tell you all about that. She has a wide-ranging expertise in product development, e-commerce, securities, trading, compliance, just really knows her stuff, and she has taken this small part of Computershare and blown it up to help you all out there bring your business from level down here to a level up here. Perhaps you're thinking about an IPO and you want to know, how do we get from here to that IPO? And we're going to talk all about that today. So Joan, tell me, what's the number one thing you would recommend to an entrepreneur who's thinking about bringing their business public and what they should do?
I would say that one of the things that we see in our business is that sometimes people come to us too early. They're really not ready to outsource to a transfer agent yet because they may be thinking of doing a capital raising, but they haven't quite gotten to the point of having everything finalized yet. And they may be thinking of doing a private placement as opposed to going public. But I would say that once the company is at the point where you've taken other people's money in, now whether that's friends, family, and fools, or whether it's a little more extensive than that, once you have investors in your business that you need to answer to and keep the books for, it's a good idea to look at some professional help in handling your records. Now, some people in the early stages may use someone in their accounting department. They may use their lawyer to keep those records. My experience is that lawyers aren't always really too thrilled to be doing that, and you can back me up on that, I think. Yeah, it's a very important piece, but usually if you're running your business and you're trying to make your company go and grow, then keeping the books and records is probably not at the forefront of your mind, but it's really important that they be kept accurately. And quite honestly, it's pretty affordable to outsource that. It makes you more transparent to your investors. It ensures that the records will be kept properly from the get-go. I can tell you from our experience, and Computershare is, as you said, and I know you've heard me say it, the biggest company no one's ever heard of. We are a pretty sizable company. We keep the books and records for about 6,000 companies here in the US, and we operate in other parts of the world too. And primarily what we're doing is keeping track of what investors own what shares or units or whatever kinds of securities the company's offering. And we do quite a variety. I mean, we keep track of convertible debentures, safes, profits, interests. I like to refer to us as the church of all comers. Sometimes whether we can keep the records for an LLC or a master limited partnership or whatever it might be, a Delaware statutory trust, we take them all. And our business is not particularly glamorous. It is record keeping and nuts and bolts. So it's keeping an accurate track of who owns what stock, when they acquired it, what the cost basis was when they acquired it. If your company goes through the various stages that most growing companies do, you might find that depending on your capital structure, you need to do a mandatory conversion of preferred stock to common. You may have had to pay interest payments on your convertible debentures or pay out to dividends to preferred stockholders and so forth. So all of those types of things, accurate record keeping is very important.
Okay. This is really great because you said a lot of stuff there, and I want to backtrack for a little bit. First of all, I want everybody to know how I know about Computershare in the first place. When I was just to show you how big this company really is, and yet they're helping out the little guy. I first heard of Computershare when I was 16 years old, and my parents for Christmas one year bought me Exxon stock. And in the mail came a statement from Computershare, because Computershare is custodian the right word?
We're the transfer agent, so we're the record keeper. Some people refer to it as custody. Custody is a slightly different concept when it comes to securities, but we are in fact the transfer agent for ExxonMobil and have been for a long time.
Yeah, and so that was my first. So when Computershare came, I saw Computershare at an event, and I thought, an event for small cap, an event for private offerings. I thought, what are they doing here? They're the transfer agent for ExxonMobil and all these other big, NASDAQ companies. So I find that to be fascinating, that you as an entrepreneur out there can have on your side the power behind ExxonMobil with record keeping. And I think that says a lot, that a company of that size is willing and able and has the resources to help out the little guy. So be sure to not be intimidated by that, because they have the resources available. Joan's here. So you also talked about limited liability companies, limited partnerships. So you're not just limited to shareholders or stock corporations. You do it all.
We do, and we have a certain amount of flexibility. At rock bottom, Computershare, think about the name, was originally started as a technology company.
Sure.
And so we do have a big in-house technology staff. We have a number of web applications. So we have a secure web portal for the issuer of the securities. We have one for the investors in the securities. We have a few other stray assorted web applications as well. So we do a lot of in-house development, and we have a core record keeping system, and then we have some sort of ancillary systems that feed that. It gives us a certain amount of flexibility in how we configure things. So we have companies that want to call their shares, and then we have companies that issue units as opposed to shares. So we have the ability to have some flexibility in terms of how we display information and how we configure it. And you're right in thinking that, we do record keeping for, I think it's probably almost 30 of the Fortune 50, a lot of publicly traded companies. But the needs of private companies when it comes to keeping a record of who owns what are very similar. So we felt that this was a good opportunity for us in terms of our growth. The number of exchange traded companies has actually been declining a bit over the last 20 years. And the number of companies that are raising capital privately, or companies that you hear referred to as unicorns, which is a private company with a valuation over $1 billion, that has grown enormously. There always have been a lot more privately held companies. So we felt that that was a good area for growth, and we looked at what we could leverage and what we can offer to companies. And quite frankly, because we do work for a lot of companies like ExxonMobil and Bank of America and Walmart, they hold us to certain standards in terms of data security and protection of investor information. And we answer to a lot of regulators as well. So the IRS pays us regular visits to audit. We have to operate. We come under the review of the comptroller, the OCC, as well as the SEC. We're not directly regulated by FINRA, but of course we hear from them as well, and we have regular dialogue with them. And we have to operate under the Uniform Commercial Code of all the states as well in order to do legal transfers of ownership. So there's a lot of regulatory oversight, which is, again, something that if you're in a privately held company and maybe this is your first rodeo, you may not know all the ins and outs of the people that are going to be peering into what you're doing and looking to see if you're doing it right. We're used to that. So that's something I think we bring to the table.
I think it also, for a lot of my clients, what it provides is a second or third set of eyes. Like I had a client who came to me the other day, and I've already introduced them to Computershare, they came to me and said, here's our cap table. So here's the list of our shareholders. Here's how many shares we've committed to giving to those shareholders. And then upon review of their articles of incorporation, they actually couldn't even give out those shares because they didn't even have them authorized. So they only had 100 shares authorized, but they had already given out 1 million shares. So yeah, a great way for you to have some problems in the future. And if you have a service like Computershare, they can keep track of all that stuff and kind of give you at least a little guidance in saying, like, you can't have this list of shareholders if you don't have these articles that match that.
And I mean, quite honestly, when people come to us, usually the first question I'm asking them is, do you have a good securities attorney? And Lord knows we've recommended you as well, because most people, their business is something entirely different. They're making widgets. You know, they might be manufacturing shoes. They could be manufacturing software. They could be, you know, putting together real estate investment vehicles. So their core business is not navigating the sometimes choppy waters of the securities business.
Sure.
So that's something that they generally don't know very much about. I mean, we had a client last summer that was looking at doing an uplisting onto an exchange. And he was this CFO, and he's a very bright man, and they navigated a lot of waters doing an IPO and so forth. And he said to me one day, he said, my lawyer keeps talking about registered and unregistered shares, and I'm not sure I know the difference or why I should be concerned about that. And I said, well, I think I can probably help you with that, but please remember, I'm not an attorney and I don't play one on TV. But it's important that you understand that either you've registered your shares and you're doing an IPO and the SEC knows who you are because you filed your registration statement, or you have exempt securities that you're offering under Regulation D or Regulation A or 144 or whatever it might be. You're exempt from registration, and some people call those unregistered securities. And I said, if you're doing anything else, we might have trouble keeping you out of an orange jumpsuit because that would be security. So, and I mean, this is a man he's a very bright guy, and he's been a CFO, but the securities business is relatively new to him. So it has its own language and its own set of rules. So it's important that people don't trip over that.
And it's relatively new to people if you really think about it, because the Jobs Act only passed in 2012. And I know we can say, well, that was 6 years ago, but we didn't have any real rules until, you know, especially regarding IPOs and things of that nature, till 2015. And an IPO is an initial public offering. And since the proliferation of the Jobs Act, we used to only be able to register on an S1 registration statement or an S11 registration statement, the same as if Walmart or Exxon was doing an offering, that's how they would do it. Now we have Regulation A+, which allows so many smaller companies to go out and raise money through an IPO and use the services of like Computershare to and actually you're compelled to do that. One thing I didn't mention is under Regulation A+, you are compelled to have a transfer agent like Computershare. So if you're going to use a transfer agent, you might as well go with the one that has a ton of experience and the technology to back it up. Because another thing I know you talk about, which is so unusual for a lot of transfer agents, or at least until recent history, was you encourage book entry. Do you want to tell us what book entry is and why it's important?
Yes. In the old-fashioned world, and the securities business has been around for a long time, we actually have a number of companies that issued their shares before the 1933 Securities Act. But most companies would issue a paper stock certificate. And interestingly, even with all of the technology that we have available to us now and all of the new rules under the Jobs Act, what I still find is that venture-backed companies and what I would call startup or emerging growth companies, almost invariably they've issued paper certificates. And that's the evidence of ownership. It's your title to the shares of stock that you own. But if you lose it, or the dog eats it, or something else awful happens to it, you then have to prove your ownership and get a replacement certificate, which can be costly. And the other
not only costly, it's super difficult to do. I actually lost a paper certificate once. It was almost impossible to get a new one. I had to scream, cry, jump up and down. It was awful. So that's why I love the fact that Computershare encourages this book entry.
We definitely do, but going back to needing an attorney's advice and needing to have your ducks in a row, we've seen situations where we've had people, whose business is coming into us, and as we have a pretty extensive onboarding process to work through everything that needs to be done, both from a data migration standpoint and all the legal documentation. Sometimes we review the articles of incorporation and the bylaws, and we find out that the company it specifies in their articles that they must issue paper certificates. So to not do that and to go with book entry means you then have to have an amendment to your bylaws, your articles, so that you're allowed to do that. Book entry is essentially electronic shares that are held by the transfer agent. The other really inconvenient thing about stock certificates is if your company does do an IPO and does list on an exchange, you then have to deposit your certificate representing your shares either with the transfer agent or with your broker. And until you do that, you can't transact on those shares. So you can't sell them because you have the shares under the mattress or on the kitchen table or in a safe deposit box. So in order to actually sell those shares, they have to be in the possession of a broker or a transfer agent in order to be sold. And so that ends up being pretty cumbersome and inconvenient for people. And it used to be, I think people were somewhat distrustful of electronic ownership. And I think my theory is that's why so many privately held companies still issue certificates, because people think, well, this is not ExxonMobil. It's not publicly traded. I want my proof of ownership. I want my piece of paper, like I have the deed to my house or the title to my car. And my experience is that venture capital and private equity companies are the worst offenders. They demand a certificate. So what we see is companies will come in and they'll have all these certificates that have been issued to the 100 people that have invested in their company. And now that they're getting ready to sort of grow up in the securities business and maybe list on an exchange or do a public offering of some sort, they're looking to figure out whether they can call in the certificates and how can they get people into book entry form so that when the stock lists, people are able to trade. So we've had a number of situations like that where we work with the clients in order to get the shares deposited and encourage people to understand what holding electronic shares can mean for them. Right. It's a lot more convenient, it's a lot safer, and it just really facilitates the transactions, whether you want to sell directly or whether you want to move the shares into your brokerage account with other assets. So it makes it much easier for you. And these days, most people have owned mutual funds, and mutual funds have always been all electronic and nice and clean and pretty with no messy paper.
Right. Speaking of nice and clean and pretty, I want to bring up something totally off topic, and that's your painting.
Yes, you may.
You know, it's so funny. I was trying to figure out, okay, I want to talk about Computershare. I want to dive deep on why this is so important, why having a transfer agent is so important for your Reg A offering, not just because it's compelled, but why it's important to have a good one. And I was Googling Joan, and I found her painting website, and your paintings are absolutely beautiful. How did you get into painting? How long have you been painting for?
Quite honestly, I don't remember not knowing how to draw. But I think I've told you that when I graduated from college, you know, you get into career, family, blah, blah, blah. And I didn't have a studio space, which I had had in college. And so I stopped painting for a long time. And then I was working for a company that Computershare acquired. So back in, I think it was 2006, that Computershare acquired us. And because we all deferred vacation and Computershare had a different fiscal year than our previous calendar fiscal year, I ended up being forced to take 3 weeks off during the summer, such a hardship, and rented a beach house. And I couldn't even tell you why. One morning I just woke up and thought, I think I'll do some artwork when I'm there, because my kids were old enough that I didn't need to have eyes in the back of my head watching them. And so I was able to, I started drawing and then painting again, and it's been wonderful because I've met the nicest people and just had some wonderful experiences. I went on a trip a year and a half ago to France to attend an art workshop with friends, and yeah, I've just met some wonderful people, lots of artists and musicians, and they're all fabulous people, and I've had a wonderful time, and I'm still to this day amazed that someone will plunk down their hard-earned cash to buy one of my paintings and take it home with them when they don't know me from a hole in the ground. So it's one thing when your friends and family will buy, you know. But
check out computershare.com. You can also, we'll have Joan's information in the comments section and the description area below. Also, check out her work at joandromey.com, her painting. I loved it. I was poking around in there. And then finally, Joan, we always end these interviews with the same question for everyone, and that is, which book do you recommend to our viewers?
Well, completely, I guess, off topic and not related to the financial world at all, but since both sides of my brain work, one of my all-time favorites is T.H. White's The Once and Future King, which some people may know because Walt Disney based the animated film The Sword and the Stone on that book.
Wow.
It's a wonderful book.
No, I'm going to definitely read. I just finished, I am not joking, this weekend I finished the 7th book in the Harry Potter series, and it was absolutely amazing.
Then I can pretty much guarantee you'll like The Once and Future King because it's a precursor to that kind of writing, so I think you'll really enjoy it.
No, that's awesome. Well, thank you so much. I want to thank my special guest, Joan Dromey, today on our segment, People You Should Know. I'm Jillian Sidoti from crowdfundinglawyers.net, and we'll see you all again sometime soon. Thanks. Bye.